going to step-by-step walk through my full strategy on how to actually day trade, and you can make $3,000, $4,000, $5,000 a week from this alone. So the way I'm going to walk through this is I'm going to actually have everything written down in a checklist that you can actually have reference used on a daily basis. So it tells you step by step what to do, when to do, why to do it, and how to do every single thing, along with actual examples of high quality trades, low quality trades, medium quality trades, low quality winning, losing trades, and etc. And I'm going to walk through all that right here, being the full strategy that I use and the thousands of people that have been successful with my strategy have used. So first things first, let's walk through a full day of exactly what you should be doing step by step. Step one, you basically have 1 hour after the market opens, draw the major supply and major demand zones. So this is a test day here. Already know what happens. That's fine. It's purely for an example perspective, and this is what you should be doing each step of the way. This is June 7, 2024. Today is the 22nd. So basically what we need to do is go to this little tool, get this little line, and we need to draw what's called the major demand zone. All that basically is a little complicated word to basically just say it's the lowest point of the day where two candles agree and then they're next to each other. Two candles being this big old red candle here and this big old little green candle right here. So we get this little drawing piece here, draw this all the way over at 532.59, and then we get this little rectangle tool, click that, and we draw in this scenario a 10-cent zone from the bottom of that all the way to the top. So if the 0.59 is the bottom, we're going to go up to 0.69. And this is the major demand zone. The concept of this is basically if something comes back to tap this zone and bounce upward, then we potentially can go ahead and take a trade. But you need to wait for this zone to be created, goes up, it does whatever it needs to do, come back to tap it, and then it goes back up. And again, as we progress in this video, I'm going to show you how that works. Even when it does tap it, what do you look for? How do you enter? When do you exit? What's the best case scenario? Like what to look for? What's good, bad, etc. So I'll walk through that. But this is the low point of the day, right? And if we go back to that piece for this video, so we have to, again, one after market opens, we draw the major demand zone as defined already at the bottom, but also the major supply zone. Again, fancy term, but all it basically means is that we're looking for the highest point of the day where two candles are agreeing, and then we basically go ahead and do the opposite of that. So we get this little line tool, and the opposite of that, I mean color-wise, and it's going to be upside down. So we go ahead and get this area here, because in this scenario, it's going to be these two candles, because the green and the red. The reason I didn't pick these two specifically is because this candle is still being formed. If I click play, you can see this candle is actually moving at the moment. So we can't do that on moving candles. These be ones that already formed on this 5-minute chart because we're specifically trading SPY. So get the drawing tool again, get this little piece here, draw this over for that line to do, get the rectangle tool. And then in this scenario, at the bottom, we did 10 cents of the size of the zone. If we did that here, it would be 0.63 all the way down to 0.53. It would be here. In this scenario, this is not correct because this zone has to be 10 cents max as long as the smallest candle is able to essentially engulf that. So in this scenario, we need to activate this, and we can only have this as big as the smallest candle of the two that agree with each other in this scenario here. So if this red one here is, what is that, down to 61, 3 cents in size, it's all we can do. And if you want logic behind that, basically from a lot of times, all these candles are, it's just orders that have basically filled. So the concept is that if we want things to come back down to hit the zone, right? The zone typically is where all of these other pending orders from hedge funds, from a lot of high buyers that are buying a lot of stuff, are actually sitting because they can't just buy all of them, right? So if this area is where essentially a little zone's at, and we're want it to come back down, hit this zone because there's a bunch of pending orders, and then bounce up, that's the idea. So the same thing here. We can't have a zone all the way out here because there's no pending orders out here technically. There's this little wick, but it's so small because it's a wick, it doesn't really matter. It's not as important. So we have this small major supply zone here. And now we're going to change this from green to red just so we can have the differentiation between the major supply and the major demand zone. So click OK. And boom. So again, that's the concept. And so again, we need to basically wait for this to come back down, come back up to hit it, and boom, it has a put to the option, an option put to the downside because we can make money to the downside. Or again, it comes down, hits this area, bounces up for an option call, which again, I'll walk through that. Quick FYI, with a lot of this stuff, it's not even that expensive. One option call for SPY that we're doing, same day expiration contracts, only one of them is only $100. So you listen to this video, you can afford it. And then the way it works is that with the way the strategy is, the most you can win on this typical kind of strategy is 20 bucks out of the $100. The most you can lose is 20 bucks. So for me, I buy about 100 contracts typically. So depending on the trade anyway, I basically go ahead and buy my 100 contracts for $10,000 on average. So you can do the math on what my wins are basically on average anyway. So, and I have a lot of those live trades as well if you want to see those. But let's go back to the checklist. So this is step one. That's all we did so far. Draw the zones. Step two, go ahead and write on the chart is the market trend up, down, or sideways. And I don't want you to overcomplicate this, right? I want you to go to this tool, visually look at it. Is it going up, down, or sideways? Keep it very simple. Just put up trend in this scenario because it's just visually going up. Don't look at, oh, there's lows and highs and there's a higher high. None of that. Just what's a 5-year-old can see. It's visually going up. So we'll just put uptrend for now. We'll get back to this later on why this was important at this specific point in time. So we go back to our checklist. Next, we set alarms near the major supply and major demand zone. So what that's going to basically do is conceptually, we need to go down to this spot. If we were doing this live, right, there would be a spot where it says set alarm after you right click, and you can set an alarm that's basically going to be a little yellow line that is essentially going to be about right here. Once it, and the idea is that, again, as mentioned, once price comes down to this area, basically taps this alarm, you're going to be notified about it and you could potentially take a trade. Same thing with here. We can't set an alarm yet because we need this to come down away from it, come back to tap it. And then once it comes back, down here, then we can go ahead and draw an alarm, or sorry, set an alarm, and we can basically wait for that action to happen. But that's this piece there, set an alarm. And again, I'll talk about why we're setting an alarm very soon, because you may be thinking, well, I'm trying to day trade actively. Why do I need an alarm? But we'll get to that very, very, very soon. So next thing, this is a little tip. Any ones that have point 1, point 2, point 3, etc. Those are just little tips. So you got to keep in mind, keep a max of only 2 zones in your chart at all times. The reason I say that is because you have to think about it at the moment. This is the lowest point of the day. This is the highest point of the day. At this period of time, this is only 1 hour after the market opens. Now, of course, the market doesn't just stay like this for the next 20, 30, 40, 50 plus years. It moves, right? So because it moves, if things go higher than this and it has a new major supply zone, then we're going to need to go to this spot, delete this, remove the drawing, so delete it, and then draw the new high of the day being the new major supply zone. And that way you still have the high of the day and the low of the day being those 2 specific zones. And that's it. That's all you can have on there. Next, if we go to the piece, now this was only zone creation, but we're done with zone creation now. Next is patience, because this is a game of patience, realistically. This is not we're taking 10,000 trades in a day, and this is not realistically, taking 2 trades a day. We're looking for high quality trades because my philosophy is I'd rather do more with less, and I'd rather be lazy than be super proactive and doing all this extra work, because I don't know about you, I like to just make money and then go do things that I want to do. I don't want to stare at the chart all day. That's just my philosophy. If you like working a lot, you like working 40 hours a week, cool, fine. This is not for you. If you instead are the person that likes to wait around for something to happen, for the trades to come to you so you can actually basically make money from you basically playing a sniper, then this is for you, right? You don't have as much stress as a result. But anyway, part 4, patience. Minimize your screen and do not look at the chart until the alarms go off. And I'm not kidding by that. At this point, we've only drawn the zones, did the alarms, and you literally need to go up to this little yellow line here, click minimize, and that's it. You do not look until the alarm goes off. The alarm goes off typically as long as you have it on your phone as well. It'll go off on your phone, and then basically you got the alarm. You can come back, look at the screen, etc. And then here's a little tip, 4.1. If you look at the chart for more than 10 minutes on daily, then that's a 100% problem. And anyone looking for some psychology when it comes to trading, you're thinking, oh man, I see the strategy. I know it works. I can understand it works. I get it, but I can't get it to work. It's more than likely because you're doing this, but 10x. You're watching the chart for 50 minutes, or you're like, oh, there's going to be a trade. I'm going to just stare at it until it potentially happens. If you watch a chart, like if we go back to here, and you're still watching this, you want something to play out, you're going to jump in a trade, and it's not going to be a high quality trade, which we'll get to very soon. But again, the core philosophy is wait for the trade to get to you. If something did not go away and then come back to it, it's not a trade. If there's a zone here, oh, it's going sideways, it's going to fall down or it's going to shoot up, that's more than likely not going to be a good trade. Sometimes it works out, but all it does is teach you bad philosophies, and you don't need to do that. I'd much rather it come all the way down here after 4 hours, and then I take the trade. And that would be the one trade I hypothetically take for the day. And I am more than likely to be happier than watching the chart for those 4 hours. Think about it. Maybe I'm crazy. Don't know. But let's go back to the chart piece here. That's 4.1. 4.2. All you need to do, as I've already mentioned, is find one clean trade max per day or one every other day, realistically. The reason I have this in parentheses is because a lot of people have the antsy/anxiety piece of it that they think just because the day is going on, they need to make a trade. And you have to think about it. If there's only 20, 22 trading days on a month, because those are business days, you don't need a trade every day. I'm not saying to do this, and this is not what I condone at all, but as a hypothetical, if you only did one trade a day, or sorry, one trade out of the whole month being the 22 days, and it would just so happen to be the best trade because you said no to all the other ones, you'll probably be more profitable than everybody you know from a trading perspective anyway. If you made $2,000 from that one trade and you said no to all the other trades, most people are not consistent with trading. So the reason they're not consistent is because they're saying yes more often than everybody else. The way to be consistent is to say no more than being yes. Think about it. With an even bigger picture, Warren Buffett, all the big investors, the hedge funds, etc., they don't make a bunch of trades generally. It's, okay, let me pick this one thing, do this, and then let it run, and then that's it. Okay, the next 6, 12 months plus, I'm not doing anything. That's bigger picture. They're they're potentially doing 1, 2, maybe 3 trades a year. Sure, it's long term, that's fine, but the philosophy, the concept that still needs to be applied even on a monthly basis from a trading perspective. Small tangent side note, when I do swing trading, which is not this, but I do swing trading, I think last week or so, I made 25,000. So you have to think about it. Am I going to do that every week or every day? Da, da, da? No, that's one a month. That's fine. Am I going to be really super upset that I made 25K of the month and I can't do another swing trade? I just wish I could do more. No, I'm fine. I'm sure you'd be fine too. But anyway, tangent over. 4.2. 4.3. Keep in mind, we have an idea at this point if we walked away. 4.3 is work out, watch Netflix. I'm not kidding. Do your day job, because more than likely you have a day job at this point if you're watching this video. Play on your phone or etc. while you wait. Again, I want to really dial this in more and more and more. If you watch the chart for more than 10 minutes, you're going to jump in a trade and it's going to be a failing trade. And then once it does happen, you're going to be looking at it. Oh, I knew that was going to happen this way, but you couldn't see it because you were in the weeds and you couldn't see the full forest. That's the problem. Step back, walk away, and wait for the trade to come to you. Cleanest trades only. We'll walk through what clean trades really look like. We haven't even gotten to it yet, right? We're only at 9. It's only in this example 9:30 a.m. CST. There hasn't even been a trade yet. So 4.4. If no trade, again, this is more psychology piece, but again, I think it's the most important component when it comes to trading. If no trade has happened that day, then technically that's a net positive green winning day. I'll say that again. If you made absolutely no money because you had the fear in your eyes of actually doing a trade because nothing literally set up for you, or you followed the strategy and nothing came to you, and a day went by, you didn't make a single trade, you're net positive because you didn't lose any money. That's a win. Keep that in mind. We'll go over that again later. And then it's supposed to be 4.5. Excuse me, that's fine. Have other errors in here as well, but it doesn't matter numerically wise. But next piece. If any of the above is ignored, you will force a trade and you will lose money. Guarantee. With the thousands of people that we've had been successful with this program, there have been people that actually, with one-on-one coaching, that haven't been successful. And a lot of times they haven't been successful because they can't get over the hump of the 10-minute piece, because they can't walk away and do something else, because they can't do one trade and they feel like they need to do 8, because they see a no trading day as a failing day to themselves internally. If any of this stuff is ignored, you will lose money over a long enough time horizon. I guarantee it to you, whether it's this strategy or not. Next, this is the patience piece. Again, I think is the most important area from 4 to 4.5, basically. Next here, zone creation part 2. Now, If a zone is broken through, but no trade happens, then delete the zone and redraw the new one. Do not watch a chart like it's your favorite TV show, realistically. So, is what I'm getting at here is that, and I already know what happens, but so let's go ahead and jump ahead. And so we see this after just 10 minutes, right? From 9:30 to 9:40, we basically had, I'll jump ahead another few minutes so I can actually, I know again what happens. Okay. So at by 10 o'clock, 30 minutes later exactly, this is what the chart looks like. Again, we had the major supply zone here. We had the major demand zone here. It never fell down, came back to tap it and went up specifically. So all it did was just fly upward. And so at this point, all these candles here represent 5 minutes. You did not need to be staring at the chart 5 minutes here, 5 minutes there, 5 minutes there, 5 minutes there, 5 minutes there. That's 5, 10, 15, 20, 25. Do not be watching the chart for 25 minutes. That's against the rules and regulations that we just specifically talked about. So if again it broke through this zone, didn't actually work at this point, we keep this down here, but we're going to need to delete some stuff now. This is a rectangle here. We're going to delete this. This little line tool here, we're going to activate this, move it on up here. It looks like we have a high of 536.17. Whoops, 17 here. And then we're going to go ahead, let me maximize this. We're going to go ahead and basically get our rectangle tool. And at 0.17 here is the top. And we're going to draw this all the way out, see if this can get the 10 cents in size. Yep, it can in the scenario. So it's going to go to 0.7. So boom, there's that major supply zone. Change has got to be red, as mentioned, because we need to signify that's the case. And keep in mind, again, these are the only two zones at this point in time where things need to be. So at this point, it's basically we'd have an alarm here. So you redraw the alarms at this point here. So again, if conceptually, whoops. Oh, okay, never mind. Yeah, accidentally bought something. That's fine. But if it goes up and you potentially buy, or so it goes up and it actually hits the spot, then we can take an option put to the downside. Okay, I was trying to check to see what happened. Anyway. So to the downside, if it comes back down to this spot and it bounces upward, then we go ahead and take an option call to the upside. And let me go ahead and draw this out further because of course it's longer now. 59, we'll draw this guy all the way out to here in the same spot, but just longer. So boom, we have that spot here. And this is signifies our little alarm basically. So I'll just go ahead and draw this out as well, just so you all can have a visual. So, whoops, draw this over here, activate it. We need it at least here. So as an example, and we'll go ahead and do another little alarm piece. So, and again, this will be a real alarm. I just can't do it on this because it's with fake money. So I can't basically set an alarm on something that's not real. So we have that piece drawn out. These are our zones. Nothing else has basically changed. So we go back to our piece here. There it is. So we're at zone creation. So we went and did this. We drew either the zone, and as 6, reset the alarms, minimize the screen, and come back only after our alarm pops off. That's it, basically. So we're back in the waiting phase, basically back in the little patience phase. 6.1. You cannot take a trade. This is more of, again, psychology and help and additional information. You cannot take a trade right away if you just drew a zone. So that's more of an FY. That's as I've kind of mentioned over here. Just because this was basically drawn right away and it looks like it kind of fell down a little bit, don't take that trade. That's not a trade. It needs to, again, come up, tap, fall, or come down, tap, jump upward. That's it. So go back to our preview piece. And we got a note here. Let it breathe. You need to wait until it pulls back on that 5-minute chart with another 5-minute candle, and then it comes back for a retest later. We just talked about that. 6.3. After redrawing the zones, you need to not stare at the screen, reset your alarms, and minimize the screen so you don't force a trade. In other words, walk away. And I know you're saying, Maurice, this is so redundant. I'm telling you, the hardest part about this strategy is you not watching the chart for more than 10 minutes. I say do the strategy, have your phone, have an alarm, have a timer going, and every time you look at the charts, click yes on the timer, click start on the timer. If it goes beyond 10 minutes and you're not consistently profitable, I'm telling you that's more than likely the reason. You're not waiting as a sniper in the grass laying down for your target to get in front of you. You're running in a field with the sniper on your shoulder like you're just going to shoot everyone. That doesn't make any sense. That's not how that works at all, right? And for reference, so I don't get demonetized, I'm talking about like a video game, I guess. Like Call of Duty or something, whatever. So that's that. 6.4, keep the max of the 2 zones at all time, and that's it. Now, candle analysis. After the alarm goes off, reopen Thinkorswim and begin to analyze the chart. If one of the below is off, then you do not take the trade at all. Follow the trend that you've identified for the day. If it's not, then do not take the trade. 8.1 highest quality winning trades are sideways trending days because they're the easiest. We're going to talk about what this one is here as a whole pretty soon. So at the moment, remember, we identified this as an uptrend at the moment, but it went up basically and then started to come down, and it's basically at this point in the middle. So we came back, did a little glance. We could see, okay, it was an uptrend, but it looks like it's going sideways. Let's just wait. Let's come back in another 30 minutes. What's it basically doing? Okay, in 30 minutes, it's kind of doing this. So it's a sideways trend. Okay, let's go ahead and change this. Let's edit this property. Sideways trend. So now we know it's no longer doing these high. It's like before, right? It went up, went sideways, then it went up. It no longer went sideways, then it go up, and then sideways, and then go up, and then sideways, and go. It's not doing that. It went up, giant dip down, and then it's trying to come back up. So it's a sideways trending day because visually it's going sideways if you look at it from this perspective, right?
If you're looking to become a consistently profitable day trader that makes $10,000 per month, then go ahead and visit mkuniversity.com/info to get started. We provide one-on-one coaching for 2 months, and that way we actually hold your hand and walk you to becoming successful with our specific day trading strategy, which is trading one strategy with one ticker and day trading once per day so you can be successful long term and actually take care of your family. And it doesn't matter where you are, by the way. If you're new to trading or you're an experienced trader already, but you're still just not consistently profitable as a whole, we'll teach you everything from A to Z from the ground up so you can be consistent, so you can be profitable, and more important, you can do the things you want to do, when you want to do them, how you want to do them, and not have to be trading so much. Because the goal when it comes to trading is to get your life back and to get your finances in order so you can do everything you want to do. And by the way, we already have 1,003 video testimonials from people that are already successful using this strategy that you've been learning in this video. So if you want to be the next person, you want to be number 1,004, then go ahead and click the link in the description where it says apply for coaching, and you can go ahead and get started. And now back to the video.
So we're waiting for this guy to get up to here. We already know again that this comes up, hits it for a major supply zone, bounce to the downside, but let's just see when it happens. So we're at 11 o'clock here. Nothing happened so far. We're at 11:30. There we go. So 11:30, it finally hit for its first little tap. And I'm just going to skip ahead further. There we go. And I'm going to change it to our default because I already know what this looks like. And I want to make this as easy as possible for everyone listening. So default, there we go. So we had our first tap on the major supply zone and it fell down. Once it taps, we're going to need to go back to our chat piece here. Whoops, wrong thing. Close that out. Go back to our preview here. And it needs to be a clean zone candle that 100% touch the zone for a retest. After that, we need a clean reversal candle that pushes away from the zone and it's small in size. So if we go through that, what that needs to look like is that it's on the 1 minute chart specifically. So if we zoom in over here, this is the zone candle because it came up and it hit the zone. So I came up with the name, clever name, I guess, zone candle. Trust me, I'm not that creative. Hit the zone. And then I was thinking, well, what's a candle name for something that reverses after that? Well, we need it to come back downward as a down push down. So this right here is the red candle because it goes from green to red, like it's pushing back downward. So this is the reversal candle. And as mentioned, it needs to be small in nature. If this candle was this size, then even though it hit the zone, and maybe it continued to go down, I'm not taking the trade. I need small candles, basically. And again, I'll talk about why specifically, but you want your trades to be decently close to the zone because you don't want to lose a bunch of money. You want it to be very, very small and then slowly get down to where you would sell for a win, which we'll talk about very soon. Next, it's a reversal candle. Have a clean reversal candle that pushes away from the zone, but again, is small in nature. So we have that reversal candle there. 11, be a clean confirmation candle that is also small. If large, don't take it. Majority / 51% of the candle itself needs to be outside of the zone, body and wick included. So this is our zone candle. This is the reversal candle. This is the confirmation candle. Majority of it outside of that zone, thankfully, 51 plus percent being majority. And it continued to follow the trend, right? This is the right candle. This is the right candle. It's showing proof that it's going downward. Next, if we go back to the chat piece here, that's 11. 12, be a clean entry candle that directionally goes past the confirmation candle. If you miss the entry, do not chase it because that's very, very, very important. So this is the entry piece. As this is forming for the first 1 to 3 to 5 seconds, give or take, jump into the trade as long as this is lower than the candle than before. Because that way you know that, hey, this is actually working. It's actually pushing down. This makes sense. It's small in nature. It's not pushing fast. It's fine. So again, same thing speed-wise. If you tried to jump in and just out of nowhere just went this far down, do not chase this trade, because if you do enter it, you're going to accidentally enter here. And trust me, when these candles are that big, the next thing, I kid you not, that happens typically is this. And you end up losing a giant, giant, giant amount because, as a FYI, our stop loss in this scenario, if I go ahead and duplicate this for the color, it's actually up here, right at this line. So you have to keep in mind. So we're basically saying, hey, we're entering here, and our stop loss being where we'd sell if something goes wrong for a loss is the top of this zone. Our win piece, which I'm going to go over a little bit later, where we're going to actually basically sell for a win, is down here in the yellow, right? And then that way, you're only willing to lose from here to here, but you're willing to gain from here to here. You're willing to win more than gain. So, as a worst case scenario, if you did lose more trades, that's fine because your wins will always be larger than your losses. If you take a bunch of trades that are not here and you enter all the way down here, or worst case scenario, somehow that candle was huge and you enter all the way down here and you're trying to enter and exit here, you're going to have a bunch of losses. And those losses are going to eat your wins up because the trades are too horrible, low quality, which again, I'll walk through even further in the upcoming pieces here. But that's the entry on 12. Now, 12.1. If during the above it's choppy, being that it does not happen right away perfectly, and I mean perfectly, green, red, 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 doesn't happen perfectly, then do not take the trade. And I know that's contrary to popular belief because sometimes, right, it could be green zone candle, reversal, maybe a confirmation candle, and then their entry doesn't start, it starts forming, right, up here, then it goes down here, then it goes up here, kind of breaks above it, then it goes back down again, and then we got another piece here, then it keeps going here, and you're like, oh, I knew I should have entered the trade. I'm not entering that. Either it goes up and it's pretty and it comes down right away, or I'm not touching it. I don't care. I want the cleanest, the simplest, the most boring visual trades possible, or nothing at all. You can sometimes try to take those harder trades if you want to, but to me, that's a harder trade. I don't want difficult. I don't want hard. I don't want challenging. I want simple, easy, boring, unchallenging money. Let me know in the comment section below if you want simple, easy money. Type yes in the chat. Yes, I want simple money if that's truly the case. If you want hard money, fine. This is not for you. I want simple things in life. I don't want all that. So next, let's go ahead and go next. Preview. Next piece, 12.2, more of an information. If any of the RCE, so it's zone reversal confirmation entry, so RCE is reversal confirmation entry specifically. Candles do not happen back to back. As mentioned, don't take them at all. You need to be as picky and as diligent and disciplined as possible. That's this piece. Now, 12.3, if during the above you feel any anxiety at all for whatever the reason, also do not take the trade. I would much rather you use that anxiety as a pro and make it so you actually take fewer trades than you jump in because of anxiety and you jump out, at the worst possible scenario because maybe something happened, right? The reason I say that is because this could enter here, it could go down positively, and then as it should be, but then maybe it goes up sideways and then does all this and that. But you had anxiety. You're like, I knew it was not going to work. I knew it wasn't going to work. I shouldn't have did it. I shouldn't have did it. I shouldn't have did it. Your heart's racing. You're sweating, etc. And you jump out for a loss, and then it goes in your favor. And as it goes in your favor, like, oh, I'll jump back in. But then, of course, jumping back in is probably like over here. And again, if it goes against you, then your loss is all the way up here. So that's the worst possible thing for you to do. You need to follow the trade. If you have anxiety, use that anxiety to your advantage. Do not jump in no matter what. I'd much rather you lose out on 56 trades, and then that teaches your anxiety to shut up because you're like, okay, I'm losing a bunch of money. My anxiety was anxiety, but now it's just guilt or regret because it seems like it works, so I just need to shut up and just do it. That's how you get rid of the anxiety. You basically let yourself lose out on trades so much that your brain starts recognizing, okay, I missed out on the trade because I was scared, okay, but it did work. I missed out on this trade but because I was scared, but it did work. And you see it so many times, you're like, okay, well, I might as well jump in. What am I, stupid? Right? That's the thought process of what you have to do. So, next piece here. Where were we? 12.4. You need to be so picky that the trades move without you because wait, sorry, excuse me, say that again. You need to be so picky that trades move on without you because you only want the simple ones. And I've already mentioned this before, but I think it's the most clear, the most important piece possible. Next piece is the take profit and stop loss component here. During the trade, draw to take profit levels. The way you're going to do that is you're going to go over here. You're going to go ahead and go to, yeah, the 5 minute chart over here, and I'll zoom in a little bit for you. So we entered here, FY, on the 1 minute chart. So we're going to need to basically go ahead and draw take profit levels. The way you draw take profit levels is very, very simple. You literally go look to the left on this day for the 5 minute chart, and where there's two candles that are next to each other, draw a line. That's your take profit. So this is take profit one. This, if you can guess, is over here for your take profit two. Right there. And this over here is take profit three. And as a hypothetical, this over here is take profit four, and so on and so forth, right? You just basically, wherever there's a line, basically, thankfully. And this is nice because there's nothing above here for there to be an actual, another take profit. So like this, there's nothing here at all. There's be two candles next to each other on the 5 minute chart. You do that. So we'd have, take profit one here, take profit two here. And FY, let me draw that again, just by the way. If we go to the 1 minute chart, it did go to take profit too. But again, for me, a lot of the time, especially if it's a high quality trade, you jump in here, worst case scenario, it could go all the way back up here because it hit that spot. This one scenario, it went up, it fell back down TP2, and then it started bouncing back upward. But again, up to you. But again, I personally say I'd rather enter here, or exit here. That's it. TP2, great, cool. If you just really think it's going to work, you have your TP2 identified, take profit 2 identified. But, you typically only need the one, depending on a lot of scenarios. So next piece here is 9. If, and it's again, I know the numbers are off, but ignore that. We'll just continue and let's pretend like the numbers are correct. 9. If right away when you enter the trade and it does not go positive, then you need to get out for break even to be safe. And I know that sounds crazy because sometimes you can get in a trade, it goes sideways basically as soon as you enter and it goes correctly. I don't like those trades. It's scary. It's anxiety. And as mentioned before, you need to use your anxiety to your advantage. It's much better to be safe than sorry. So for that scenario again, if I go over here, if we entered here and the next candle did this, went upward, I'm terrified. I want to get out the trade immediately. I don't want to deal with this because sometimes it can go sideways for 10 dang minutes. But if it does, as that hypothetical, right? And it does this, and then it goes back up here, then it does this, then it goes up here, right? And then it does this. And this happens all the time, right? And then, it runs down. Great, fine. I'm not waiting for that. I'm not waiting for the choppy stuff. If I entered here, it immediately went against me. I'm looking for the break-even spot, and the break-even spot, if I entered on that beginning of that candle, is anywhere this basically line is. So I can sell here for break even, here for break even, or slight profit to get commissions back, right? Profit here, break even, nothing here, break even here. That's fine. I want to get out. I don't want any of that crap, right? So next preview piece here. Set an alarm near TP1 and your stop loss. And this is different. This is a harder one. So I'm not saying everyone needs to do this right away. Once you get comfortable with the strategy, I say do it. But after when you're first starting, this can be hard. But this is actually the best way to get, if you have issues with anxiety, when you're doing trading, it's actually this, and I'm not kidding. It's, all this wouldn't be here. So we'll delete this, we'll delete that, we'll delete this guy, we'll delete this guy, delete that guy, and last thing, delete this. Whoops. Is if your TP1 is here, you need to set an alarm, literally, right at the spot here. Set an alarm right up here. And then literally, I'm not kidding, close the screen and walk away. And that way, you're not testing the waters of I should jump in, I should scale out, I should put more money into into the trade. Oh, I'm terrified, I should get out. If you can't see it, you can't manipulate it, and you can't mess it up. That's how I actually trade. 10 is one of the most important pieces for me specifically, for a lot of students, especially if they have anxiety. I don't like look at the chart because if it does go down in my favor and then it starts going sideways, I'm staring at it. I'm not blinking. My heart escalated from 60 BPM to 105. Right? You're sweating. You're clammy. I don't want to go through that. Set the alarm. Pick up my phone, as I mentioned. Play a little video game on my phone, search something for Google, watch TikTok, watch YouTube, something. I can't watch a trade, and I don't think a lot of people should either, right? But that's 10. FY, if no TP can be identified, then FY, do not take the trade. So if we go back, and we know in this scenario, delete that, let me delete this as well for you. This is TP1, but let's just say for whatever the reason, there's no take profit here at all. Then I typically say don't take the trade. Like if you go to the 5 minute chart, and just as an example, there's ways to do this, but let's just say it kept going higher, came down to bounce on top of this, and then went up further for a bounce to the upside, but there's nothing on the left. There's ways to find a take profit from other days, but let's just say it's going to all-time highs for the S&P 500 being what we trade. Then I typically say don't take the trade. There's ways to do it. You can exit after 2 candles if you're a student of mine that do the one-on-one coaching program. That's fine. Understand that. We have taught that. But for most people, if it's going for an all-time high and you can't find a take profit or you can't find a take profit for the same day, don't take the trade. You need the simple, easy, boring trades that you know when they're going to reverse. You have a clear take profit. You have a clear stop loss, and there's no anxiety at all. Those are the trades you need to take and nothing more. So that's that. So set an alarm near take profit and your stop loss and option walk away, as mentioned. If no take profit, don't take the trade. Now 10.2, if going to all-time high, I already mentioned this, then you can exit after 2 candles max. But for majority of people, if you're new to this, don't follow this piece. If you're new to this trading, you're new to trading this strategy, don't even exit after 2 candles. Don't enter the trade, period. We need you to be consistently profitable. We don't need you just trading to be trading because you want to make money. That's fine. Because the issue with this, FY, it does work and it's fine. 2 candles can be between 5 to 11% of a gain on an all-time high kind of move. That's cool. But the issue again is that it teaches you when you enter a trade and it goes correctly, you wait for 2 candles, being the 2 candle principle that I call it, and you exit. And yet you missed out on all the money, and then you get anxiety coming through to you because you're like, oh man, I should have held on. I'm terrified. I'm just stupid now, and now there's no more trades. And the next day happens, and you jump in bad trades, and you have all this horrible cycle over and over and over again. So for majority of people, if you can't handle it, don't do it. 10.2, pretend like it's not there. Depends on where you are in your trading journey. Now 13. I don't even know how did I go from 10.2 to 13. That doesn't even make any sense. I don't know what I was thinking here. I guess whatever. Distract yourself to not stare at the screen since that causes panic. Play on your phone as mentioned, as it's going to your take profit thing. Don't stare at the screen and don't blink. Blink, but look at your phone. don't stare at the screen. It'll make you start seeing things that aren't there, and you'll end up doing crazy, stupid, crazy stuff. And before you know it, you took 16 trades in a day. We don't need that. 13.2. Wow, it's not even point 0.1. Whatever. Okay. Only look back once the alarm pops off and sell immediately at that take profit or at stop loss, no matter what. Here's a quick little tip with this, FY. What's kind of cool about this? After it comes down, hits this take profit spot, or as a hypothetical, it hits this stop loss area. The nice thing about it is that if you didn't look at the screen, it was minimized, and you come back, you hear an alarm pop off, immediately your heart's going to race. Guarantee. Happens all the time, happens to me. It's normal. Because you're like, did I win? Did I lose? Did I win? Did I lose? In this scenario, oh great, I won. You're immediately happy. You're going to sell it as soon as possible. You're not even going to wait for TP2. You're going to see, hey, I'm up $2,000-$3,000. I'm selling them good. Or you're going to see it over here. Oh my God, I'm down. What would this be? I guess for me as an example, if this was up, I think this was up like $4,000 when I took this trade June 7th anyway, but $4,000 give or take, and this would be down, I think $500 or so, which is, by the way, a great exchange. But if this is down $500, it's immediately, oh my God, I'm losing. I'm getting out of it quickly. If you're watching the chart, you see the pain of going up, down $100, down $200, down $300, down $400, down $500. You're like, okay, it'll come back, it'll come back, it'll come back. I'll just hold it, and then The candle's all the way up here, and then you're down 1,000, and that would mess you up. So I like the alarms just from that scenario because it forces you to panic intentionally once you come back to the screen and sell it for a big win or sell it for a micro, tiny, baby little loss. Because it's a surprise when you come to see it, as long as you follow the strategy. And the strategy is guaranteed to win 70% of the time, but it's also guaranteed to lose 30% of the time. So there will be losses, but the panic's going to help you to make sure that you minimize the losses, but maximize the wins as well, right? The point of this is to be as robotic and systematic as possible when it comes to trading. Now, where were we? We were at 13.2 because, of course, that number makes sense. Um, so, yeah. And by the way, I know this is on the other stuff, but it's on the other piece up here, but I want to walk through this because this is the last piece, right? We already went through the strategy. So there's 3 goals every single day. FY. Talk yourself out of a trade as often as possible. That's goal 1. I think I've addressed that enough. Goal 2, set alarms and close Thinkorswim. Wait for an alarm. Talked about that as well. But again, one of the fundamentally most important things when it comes to trading. Goal 3, the honestly, I probably should have put this as 1 because I think it's the most important piece for a lot of people why they long term lose trades so much. But watch the chart for 10 minutes max per day. And that's it. Especially if you set an alarms, right? You entered here, you waited, came back, boom, exited. You don't need to be watching all this. But what if it did this and it went sideways for a little while, then it'll finally went down. You're in profit, that's fine. You're going to talk yourself out of it. Wait and come back. Now, let's go through some couple things. This is what I called a high quality winning trade. This is the trade we talked about. Reason it's high quality is because it has 5 specific components of a high quality trade. Major zone trade, right? Off the top, bounce off the bottom. That was it. It had the CRC candles, the zone reversal confirmation, entry candle, perfectly as it would be. Next, it's a sideways trend, as mentioned before. If we go back to that 5-minute chart over here, it was an uptrending day at first, but then it went dramatically down and it became a sideways trending day. Those are the easier days to play because you're waiting for predetermined zones that you specifically drew to actually be hit, bounced off of, and then boom, you have a trade. So sideways trending day. Next, very, very important piece that a lot of people miss out on, small RCE candles. So the RCE being those little small candles over here, you need those to be small in nature so they're closer to that stop loss so you'll have less to lose but way more to gain. Next is a clear same day take profit exit as mentioned. Things are going just wherever and there's no zones there's no zone for you to actually do a take profit, or you got to look for yesterday, which I call a multi-day zone, or there's going to an all-time high. I don't want to take those trades. They're kind of annoying, honestly. And I'd rather have a take profit that's from the same day, which specifically typically is from sideways trending days. If you do, that equals $sign. If not, $3 signs. But yeah, do only this trade every single day that it actually appears. This is the main bread and butter, the main only trade that I actually take, and a lot of my students actually take when they do the one-on-one coaching program that's 10 weeks long and with all this. And I know what you're thinking. You're like, okay, the strategy is simple. But you have to think about it. What's the craziest thing? And I'll go through more trades actually very soon. Craziest thing, this is still a lot of stuff, but all this is psychology, right? Think about it. We drew a line in a rectangle. That's zone creation. We went through patience piece, which is all psychology. Zone recreation, basically, is what it should be drawn, which is, again, still a line and rectangle. And I'm just saying, walk away, going through psychology, candle analysis. Like, the concept of the strategy is literally draw a line, a rectangle, wait for 3.1 candles, which is the ZRC stuff, and then sell it when it gets to one of the 2 spots. That's basically it. But somehow, all of this stuff is basically tied into analysis is tied into trader psychology, because that's the core to all of it. A lot of you are not successful trading wise is because you don't focus on that. You think it's all the tactical stuff. You think it's all I need to have all these indicators and have this and that and have VWAP and have volume and have all that. It's not that. If it was, then everyone would use whatever the indicator is anyway. And then they'd all make a bunch of money. It has nothing to do with that. That's why you're not successful yet. But this is high quality winning trades. Next, let's talk about low quality winning trades, which is an interesting concept, right? Top is the 1-minute chart. Bottom is the 5-minute chart. Bottom is the 5-minute chart. You see it did tap off the major demand zone multiple times. It was actually, it bounced off twice. There's 2 trades potentially. But the one where the yellow circles are over in this spot here, This basically signifies that, hey, there's an entry piece there and there's an exit right at that little VWAP. I'm not going to get into take profits, etc. But I'm just saying that's the exit specifically. Trust me. So the first yellow circle, not a box, yellow circle is the entry. But it's so far away from the bottom of that green zone, you're willing to lose way, way, way too much money to make way, way, way a decent amount of money. But still, it's too far away, right? I like tiny little small candles and a big amount of money I can make. This is low quality, but it's a winning trade. And a lot of people take this trade. The reason why this is bad is because let's say you take this trade and it works. Great. Let's say you take this trade again and it doesn't work. You lost all the money you just took potentially from this trade, 2x potentially. Maybe not 2x, but you lost all the money from the previous trade. And you don't want that. That's horrible, right? So if something like this happens, I genuinely just let it keep going. Like, I missed it, dang. Because keep in mind, if we go back up, right, we have to look at, where was it, candle analysis? Yeah, candle analysis. I mentioned it multiple times, is that small in size is what it needs to be. If it pushes away from the zone, it needs to be small in size. Confirmation candle, if it's not, it needs to be small. If large, then don't take the trade. Entry candle, same thing. So if we go down here, right, this small candles perfectly on the 1 minute chart, the top chart over there. This over here, 1 minute chart at the top, the candles are too big, way too big. So as a result, not taking the trade at all whatsoever. I'm letting it run off without me. And as you can see, it ran up pretty far actually. On the bottom 5 minute chart, it went all the way to the top. It's a huge move. But I don't care because I like simplistic stuff. If you're not in the one-on-one coaching program, a lot of people have the issue with this because they jump in and like, oh, it worked, it worked, it worked. But then when it doesn't work, they lose a bunch and like, dang it, I knew I missed something. This is part of the problem. You have the thought process to think, just because I made money, all money's good money. Well, I'm trying to tell you, all money's not good money. You can make a whole bunch of money being a drug dealer, but you don't want to do that, and you shouldn't do that. That's not good money. So same thing here. This is the same type of thing in my eyes. It's bad money. You don't want to do that. You shouldn't do that. Same trades or nothing. This trade here, great. This trade here wins. Horrible trade. Do not take this trade. 5 components of this quality trade, right? This is again what we're looking for. But this has large RC candles. So the risk is too high, even though it worked in this specific example. Next, medium quality winning trades. I'll kind of go a little quicker on this one. But this, we can see on the bottom 5 minute chart, it just ran up all day. It was a simple day. Basically, if you buy an option call anywhere, you would have made money. Cool, fine. Here's the issue. You have to keep, so you remember how we had one major supply zone up here, then we deleted it and we drew the new major supply up zone up here, and then we deleted this one. Fine. But all uptrending days, you have to delete this. Okay, let me redraw another one. Delete the next one. Okay, let me redraw another one. Then you got the anxiety of, okay, it's just going up. I just need to enter a call. Just need to enter a play. Just need to enter a play. And you end up chasing. So it's not necessarily high quality because it's harder to actually judge when you're going to get the perfect entry because the zone always moves. With this, we know, hey, once it hits this, then I'm going to take a play downward. But we have to wait for a medium quality day to essentially say, okay, once this new zone forms, then I'm going to wait for it to break above it, come back down for a retest, basically in this spot over here. So zone reversal, confirmation entry. And then once it does that, then I can enter the play and let it run up. But if it doesn't do that, then I have to wait. But then you're looking at all this, it's a whole bunch of sideways stuff, and you're thinking, maybe it's going to fall. I think it's going to reverse. It's going to fall down. I can do an option put. And you're trying to bet against the market, even though it's all it did was going up. So it's not necessarily an easy day from that component alone because the zones keep moving, right? So again, as mentioned down here, this is what you want. This is what this is. The major zone keeps moving due to the upward trend or all downward trend, right? So identifying an entry for a lot of people is actually very challenging. Now there's 1, 2, 3, 4, 5. There's 5 very, very clean, nice trades on this. But again, you have to be very good on drawing these little lines and rectangles called the major demand and major supply zones and deleting the other ones as they come up. And then, FYI, as mentioned, there's not a take profit in sight. So you'll have to look at days before to see if there's something where 2 candles are agreeing for TP1, TP2 for you to run to. And if there's not, then you're just shooting in the dark to hope it just doesn't reverse hard on you. I don't per se really like that. I like same boring. Let me go back up. I think you might have forgot. I like this. If this happens, I'm taking it. This happens, I'm not taking it. If this happens, you might call me crazy. More often than not, I'm not taking it. Sometimes I will, but I sometimes don't typically like to. Reason why is because Any point in time, it could be an uptrend, and then boom, it reverses back down to just out of nowhere be a stupid downtrend. And then you're sitting there thinking, well, it was going up for 3 hours, so logically it should go up for at least 3.5 hours, 3.5 hours, whatever. And then it just reverses on you, and then it teaches you this bad type of trading, right? Because you're just using different logic, right? I want the logic of wait for the zone to get tapped, hits the tap, wait for it to play out. Now, again, these trades work. If you visually understand these better, then these over here, then for you it could be flipped because some people, this is not a medium quality trade. For them, it's high quality, and they just clearly they 100% just can't see this. It depends on the person. Some people further than that, this is high quality, but also this is high quality as well. It depends on the person. But again, I just want to take one trade, one type of trade specifically, and that's it. If you need multiple trades, cool, do a medium. I'm not doing it. I want simple, simplistic, take it or leave it type stuff. That's this. Next, low quality and high quality winning trades back to back, which is very interesting. So on the left side, we have two yellow circles, boom and boom. This one, as you can see, it broke. Let me actually screenshot this, and I can give a better analysis on this more clearly. All right. And let's zoom in on this guy. Okay, so this is the 1 minute chart. So we say we had our entry here and we had our exit here. For one, it's too low, too far away from the stop loss. Stop loss being up here in this scenario. It's too far away. I don't like that in the first place. But it was clear it's kind of clear, right? It came up, didn't tap the zone perfectly and fall down. In this scenario, it went all the way, did all this, and it finally hit over here for the zone candle. Then we had a reversal candle. But then the confirmation candle is not this because it's not outside of the zone as mentioned in the MKU checklist. This is the giant confirmation. And what do we say about big candles? We don't like big candles. 51% of the candle needs to be outside of it, fine. But then it's too big because it's so far away from the stop loss. And then right after that, what happened? This is not an entry candle because it didn't form below it. This isn't the entry candle that didn't form below it. This finally is entry candle because this basically is below the candle that we mentioned here. So you enter on the yellow piece and you exit here. But again, same logic. You're willing to bet this to lose that, but to gain this. This line is much smaller than this line. That's crazy. You don't need to do that. So let the trade go. Next, literally what happened? Came back up, tapped it. It was beautiful. We had zone candle, reversal candle, confirmation candle outside of the zone, and below that, boom, entry candle, right? And then went back up a little bit, bam, fell right back down, right? And then that's it. This isn't a long sideways type thing. That's fine. If you did get out at break even, that's fine. But I'm just saying it's a much, 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 much clearer trade as a whole. And then we go down here. So clean trade or nothing. Let them go on without you. If it's not perfect and clean, that's the concept. That's what you need to look for. High quality pieces there. And now here's an interesting piece. This is the same day, FYI. So high quality losing trade because you can have that as well. So this guy, we had our zone candle, reversal, confirmation, entry, and it went against us. We lost. For one, I mean, heck, it did bounce off of it twice already. But two, I don't really care about that. If that criteria pops up, being the small candles, it comes up to hit the zone, it starts pulling back down, I'm entering the trade. This is an entry piece here. And then it just so happens to fail here. That's fine because, again, the strategy is guaranteed to make you win 70% of the time, but it's also guaranteed to make you lose 30% of the time. So that's part of the game. You lost this trade. That's okay. So this, and I just mentioned this down here. So it's good that you're building good habits, but you are making small losing trades. Because look, if you entered here, you only exited here. Versus if you entered in this spot over here, as mentioned before, you exit on the first trade, right? If we go back on the first trade, you enter all the way over in that first yellow piece, and then the potential loss would be so much larger. You need to eliminate those big losses. So that's high quality there. Here's a high quality break even trade. I didn't even go over this day. I almost thought about going over this day, but check it out. Full sideways trending day. Perfect day, really. Let me go ahead and screenshot this guy again, or this one anyway, and I'll walk through it with you all step by step. And let's go ahead and zoom in. So we had first, this is a 5-minute chart. If we check this out, there was a tap over here, but it was too late. First, there was a trade over here. That's 1. 2, there's a trade over here. 3, 4, 5, 6, 7. There's 7 major supply zone trades in this single day. This is the 14th. FY, Today's the 22nd. This just happened, literally. This happens all the time. You'd be so surprised how often this happens. And there's 7 of these, and I just picked the one that worked, but not necessarily the best per se. It's high quality because and you kind of call it whatever, but it's high quality in this scenario because you enter right here, it's decently fine, but then it goes sideways for quite some time, right? And so with it going sideways, if things go immediately sideways up all the way to the zone specifically, I don't too much like that. It kind of makes me worry. So if you're not an experienced trader, I typically say you need to probably try to get out at break even. So if you're entering, let me go ahead and delete this thing for us, where the yellow piece is, all break even is exactly where this line is. You have this candle to get out. 1, 2, 3, 4, 5, 6, 7, 8. You have over 10 minutes. Let's move it back up, right? Over 10 minutes to get out at break even at some point in time. Because again, if you're new to the strategy, you need the highest quality possible wins possible. And this is break even. You can get out at profit in any of this spot anyway, even if it's very, very, very small, right? The point is that sometimes you have to again use that anxiety to your advantage over time, and you start seeing trades like this and you've noticed, okay, it did fly later on, like you can use deeper analysis, right? It's like, okay, well, it did hit this area over here and it flew down. Clearly this trade's going to work. It just might take some time. Then later on you're like, okay, you know what, I'll just let it, I'll play it out, right? It'll end up working as it continues on downward. It's just going to take some time, and as it did, right, it worked here again, here there, over there, right? You could almost enter dang near anywhere, but follow the strategy, of course. So that's the core piece to it. If you're new, if it starts going against you, get out of break even. Perfectly fine. If you're intermediate or advanced like me or some of the students, then that's fine. You can go ahead and hold the trade, wait until it works out, etc. Which is why it's high quality, but a break even trade for many new traders specifically. So as mentioned down here, and I'll go ahead and change this guy to red in this spot down here, a trade should immediately go in your favor. You can't start off on a bad foot up front, especially if you're a new trader as a whole. Once you're experienced, you can take some more of those trades like that. So overall, this is the MKU checklist for how exactly to do the entire strategy from A to Z.